Hello, this is Andrew Westhof. I'm a loan officer in Ann Arbor, Michigan, and today I'm going to talk to you about how property taxes increase when you purchase a home in Michigan. So if you purchased a home in Michigan before, you probably already know that your taxes increase typically about a year after you purchase the home. You may not know why. If you're buying a home for the first time, you might not know that this is even a thing, and it's certainly something that you do need to consider when you're buying a home, because one of the biggest mistakes I see a lot of first-time home buyers make right now is they just look at the payment that the mortgage company gives them that includes the current tax rate and say, yep, I can afford that, and then they purchase the home. When in all actuality, the taxes are likely going to increase, oftentimes significantly, so that monthly payment's going to increase. So I'm going to show you a little bit of why and how today. So the reason that the taxes in Michigan increase, and oftentimes substantially, is because there's caps that are placed on the taxes for the current homeowner, which is a good thing when you're a homeowner because your taxes stay quite a bit lower than what they would be if there weren't caps in place. So those caps are 5% or the rate of inflation, whichever is lower on an annual basis. So the last 10 years or so, the rate of inflation has been around 2% or under 2%. This video is being recorded in December of 2021. This year, inflation will reach, probably will be above 5%. So for the 2022 taxes, that 5% cap will probably be in place. But regardless, the amount that properties, homes have appreciated in value has far outpast that rate. And they usually do, even in a normal market, but this market has been pretty crazy for the last 10 years. So the current homeowners are paying taxes on artificially lower basis than what they would be if the taxable value would have been in line with the increase in value. So I'll kind of show you how that looks here in just a moment. When the home is sold, the taxes are lifted. The caps are lifted. So immediately, whatever municipality the home is in is going to lift that. They're going to lift those caps, and the taxes are going to increase from basically day one. Taxes now are billed twice a year in most areas in Michigan. There's a winter and summer tax bill. So for that next tax bill that you get, that's where you're going to definitely see the increase. But oftentimes you'll see an increase even further than that because the home will also be reassessed. And I'll show you some of the math on how that looks as well here. So what I do for my clients is I like to show them what everybody does, is show them what the current payment is going to be, as well as show them what the estimate of what the taxes are going to increase will be. I'll give them an estimate as well so that they're not blindsided by this. So what I do is I go to a website called bsaonline.com. I will include that website in the video notes as well. But here's some snippets from a property that I recently priced out for a client of mine to show you what we as lenders are looking at. So we pull the public tax records, and all we're really doing is looking at the current tax rate, which is for winter of 2021. Current taxes were $2,839.25 in this municipality. It happens to be in Dexter, Michigan, where winter taxes are a little bit higher. Usually summer taxes are higher, but it varies from each municipality. And then summer 2021 taxes were $1,068.74. So all we're doing is adding those two numbers together and dividing by 12 to figure out how much of your payment is going to be property tax escrow. We're basically setting this up as if the taxes weren't going to change, even though we know they're going to change. A lot of that has to do with some rules and regulations on how escrows for taxes and homeowners insurance have to be calculated. And it's very rare. There's not very few exceptions where we can set up the escrow account based on anything higher than what the current tax rate is. So we kind of show you the lower payment, and a lot of lenders don't talk to you about this stuff because when they can make your payment look lower, it's more likely you're going to buy the home, and then more likely they're going to get to do a loan with you. So they don't see a reason to, but then you get a big shock about a year after you buy the home. So one of the things that the website that we use that I'll show you that also shows is the taxable value. So this is what the current owners are paying taxes on currently. The city of Dexter is saying the home is taxed at a rate of $101,963. They're not saying the home's worth $101,963. They're saying it's taxed at that. This will get into state equalized values and assessed values, which you see the assessed value right there. They're saying $138,400 is what the home should get taxed at. Now, a lot of people will say assessed value and state equalized value, which are kind of interchangeable. should equal half of the value of the home. This home is listed for $370,000. So 370 and a lot of people say, whoops. A lot of people say state equalized value or assessed value should be about half of the home's value. So you could just divide by 2 and get 185,000. It's usually a little less. I like to use 40. My range is 45% to 50% of the value, and I like to use 48% for my estimates. So 177,600. So we'll get into a little more detail on that, but we see that assessed value is already still a little bit low. So just kind of remember that, and we'll bring it up later here. So what we're doing as an example for this property, right off of that page that we just looked at, summer taxes are $1,068.74. Winter taxes are $2839.25. Adding those together, dividing by 12, we're going to include $325.66 and the monthly payment, assuming that you're escrowing for your property taxes. And we already mentioned that's the current taxable value, but the current assessed value is $138,400. So we know the taxes are going to go up to at least that amount because that's the current assessed value, but that assessment's likely to go up as well. So here's kind of the math to figure out a good estimate on how they're going to go up. So if we know that they're paying $3907.99 per year currently, and the value is $101,963, we can do the division there, and we come up with 0.038327, or basically 3.833%. So they're taking the taxable value at 3.833%, and that's what this person approximately is paying per year in taxes. So if we multiply that out by the $138,400 that it's currently assessed at, we know that the taxes are going to go up to $5,404.87, which is $1,396.88 more per year. Or on the monthly escrow payment for property taxes is $116.41. But there's more. So as I mentioned, the assessment is also likely very low. And just briefly, I want to explain why. So tax assessors in different cities and counties and different municipalities, they're paid by the local municipality, and they make money for the city or township, wherever they are, by getting increased tax revenue. And the way they do that is, one of the big ways is when homes are sold, they can reassess that home because the value is likely gone up to get the maximum tax value when those caps are lifted. So the reason this property is likely at $138,400 when we think the actual taxable value should be, sorry, I'll do the math again. I thought I saved it. Something like $177,600 is because it doesn't gain the city or township any money by reassessing it on a regular basis. So they probably only do it at once every 2 years or once every 5 years or something like that, because with those caps in place, they're not going to make any more tax revenue on the current owner anyway. They're going to hit the caps much sooner. So what happens when you purchase a home is usually within the first year, sometimes even sooner if it's pretty close to like when the summer tax bill or winter tax bill, whatever the tax bill that the city is getting comes out. They a lot of times will try to get that assessor out there right away to get the taxes increased right away. So again, I like to assume about 45 to 50% of the appraised value is going to be what the home is assessed at after the home is sold. And there's a range just based on area location. Different assessors do it a little bit differently. But when you buy a home, you don't know what the appraised value is, but you can assume that the price you're paying, the purchase price, is going to be pretty close because you expect it to appraise at that amount. That'll give you a good estimate. Just use the list price or the purchase price. So here's the math on this that we just did on the calculator. So the home is worth $300, or the home sale price is $370,000, and we're going to assume that the appraised value is 48%. So $177,600, and we're literally going to do the same math we did on the previous slide, where we take that 0.03833 or 3.833% times that $177,600, and that's what we actually expect the taxes to go to within the first year after the purchase, after the home is reassessed. So that's $28.99 and 42 cents higher than what the current homeowner is paying and what the current mortgage company is going to set up the escrow and the original payment on. So they need to assume that the taxes are going to increase by another almost $3,000 a year, which will be $241.62 per month is what that tax bill is going to increase by. So what actually happens when the taxes go up? Your payment doesn't just automatically go up to $241.62 in this situation. It's going to take a little bit of time, typically, because the mortgage company does what's called an annual escrow analysis. So even though you might get the tax bills in the mail that you don't have to pay if your taxes are escrowed by the mortgage company, they're just an FYI for you. They're going to go up, and then the mortgage company is just going to pay out of your current escrow account, and they'll actually let your escrow account go short, go to a negative number, which is likely to happen if the taxes increase a decent amount, because they only set the escrow up initially, money that you pay at closing to set the escrow account up based on what the current taxes were, the taxes of the previous owner. So when that happens, your payment's going to increase to cover the actual tax amount, which we expect, $241.62 in this scenario. But your payment is also going to increase to catch up the shortage. So if there wasn't enough money to pay the taxes when they're due, which there likely wasn't, the mortgage company is going to pay them for you, and then you're going to have to just they're going to have to collect money to pay that back. Now, different servicers can do this different ways. Every servicer that I know of does it the 12-month catch-up route, but it's not a bad idea to check with your servicer if you're concerned about this on how they will actually calculate this, because they might come and say, hey, your escrow account's negative, you got to pay that money right away, which would be even a bigger shock if that's how they did it. So if we do the math from the previous slides and we know what the taxes are going to increase by, and you're planning for it, you can budget for the increase when that shortage happens. So what I recommend for my clients is we do the estimate when we send them out their fee worksheet to show them what the payment's going to be. We say, hey, this is what your payment's going to look like from day one if you purchase this home today with the current taxes. We expect the taxes to increase, in this case, just under $3,000. So you'll probably want to budget for $250 a month from day one that you purchase the home, so that when the taxes go up, you can have some money in your account to pay the shortage when it happens. And you're also already paying $250 extra a month. So it's not like your budget is going to change, really. You're just going to be paying that to your mortgage as opposed to just putting it in your savings each month. That's a good way to do it. You can make extra payments directly to your escrow account, but it doesn't automatically happen. If you decide to make extra payments, they're going to be automatically put towards your principal. So it's very important that if you want to actually do it with your mortgage servicer and do it directly into the escrow account, that you talk to them and see how that needs to happen. So you don't want to just make $250 extra payment per month in this scenario, and then when the taxes go up, that's not going to help you. Your mortgage balance will be lower, probably about $3,000 lower, because it'll probably happen about a year later, but it's not going to have gone into your escrow account like you wanted it to. Most servicers would probably make you do this manually each month if you did it, either by phone or online payment to direct it towards the escrow account and not to the principal. So my advice is usually just to not make it more difficult on yourself and just to do it directly to, save it on hand in your savings account, because it's not going to make a huge difference either way when your mortgage payment goes up, because there's a shortage and because they did the escrow analysis, so now they're including the higher tax rate in your payment. You can call your mortgage servicer at that point and say, hey, I want to pay the shortage portion of that off so that I don't have to pay the additional each month to catch that up. You can catch it up over the 12 months, though, if that's what your servicer does, which, like I said, most do. It's an interest-free loan at that point, so it's not a bad thing, but either way, you want to be able to plan for that shortage happening. So here's an example of this, and just in case that was me just babbling on about how it works. This should hopefully give you a little bit more insight. So let's say that your total payment's $1,000. That's including principal, interest, taxes, and homeowner's insurance. So that's everything. Of that payment, your property tax, so not of that payment, your taxes are included, but we say after the first year, your property taxes increase $2,400 per year. So we also set up the taxes based on the current tax rate. So let's say just based on the timing of when the taxes went up and when the escrow analysis happened, that there was a negative amount of $1,800 in your escrow account, which is should be about right. Your escrow account will have originally be set up with some reserves, but not a ton. So probably, this would be relatively normal that it's short about $1,800. I would plan for it being short $2,400 if we estimated $2,400 increase just to be safe. But this will give you a good. This is pretty realistic. So what happens is the mortgage company first says, hey, your taxes went up $2,400 a year. We got to increase your payment by $200 a month because we expect them to be about the same next year. And moving forward, because those caps are in place, they will be about the same next year. But the $1,800 shortage, we just divided that by 12. And over the next 12 months of your mortgage, you're going to pay an additional $150 a month so that $1,800 negative amount goes to zero. So the initial increase is going to be $350 per month to catch up the shortage and for the actual tax increase. After 12 months, that $150 additional a month drops off, and then your payment goes to $1,200 moving forward. So if you didn't budget for a $1,200 payment, obviously that's going to be an issue anyway. But also, if you didn't know about this, when it jumps up to $1,350, $350 more a month, it might be even a bigger issue, especially if you don't have some money in savings to pay that shortage off, so that you can adjust to just the $1,200 savings. So long story short, you're going to be able to budget a lot better for this if you are aware of approximately what the increase is going to go to. Here's the math on it. What I always do for my clients is, like I mentioned, price it out, give them an estimate of the increase, and go over this stuff with them. That way, it's not a shock and it's planned for, so it makes things a lot easier when it inevitably happens. It happens to most homeowners currently in Michigan because home prices have increased so rapidly recently. So I want to show you this real quick. This is the website I originally went to, and again, I'm going to put this this in the show notes. But pretty cool that Michigan has this. In most municipalities, at least in my area where I do loans in Southeast Michigan, you can pull taxes for a property. So when you're looking at homes, you can go, all I did there was at the top, you have all these letters. These are the beginning letter of the county. I do a lot of business in Washtenaw County, Ann Arbor areas and surrounding areas. So I'm in Washtenaw County quite a bit. You see it's in alphabetical order, so Wayne County's next. So the property that we just looked up was in Dexter. Note that there's a Dexter Township and City of Dexter, so you got to kind of figure out trial and error which county that the property's in. If you look at a property that has this little credit card symbol, this little blue rectangle is a credit card, that means they're going to charge you per property search. And right now they charge $2, but it's about to go up to $3 per property search. So be aware of that. And then you can just click there and you're just putting in the address. I just put literally the digits of the address, the direction if there is one, east, south, northwest, and then the street name. I don't include drive, core, anything like that. It's smart enough that it's going to be able to pull it up just on the numbers of the address and the street name and direction. So that's pretty cool. It will show you just what I had here. Excuse me. This is the kind of what's at the top of the page. And then this is a little further down. Usually there might be a little box you have to check to get tax history. It'll also show you things like previous owners, what the sales price for the property was previously, if they pulled any permits to do any kind of renovations in the past and when they did that. Utility bills are sometimes on there if utilities are controlled by the municipality. So there's a decent amount of information that can be on there. Every municipality is different on what they include on this. So again, I'll put this in the show notes so that you can play around with that if you'd like. And then if you're not able to pull the taxes on a property, don't want to pay for it, or you're just starting your search and you don't know the exact property, but you know the area you're looking at, I'll put this address in the show notes as well. This is a cool free property tax estimator that the state of Michigan has. So all you do here is you want to put the state equalized value. And again, that's going to be the 45 to 50% of the purchase price of the home. So like in this case, let's go, since this was in Dexter, I can't remember. So you're searching by county. I can't remember if this was Dexter or if this was Dexter Township. It was just Dexter. So it's going to ask you the city, village, township. So county first, city, village, township, and then the school district. And then it's going to have you put that 48% or whatever number you want to use, 45 to 50. If you want to use the higher side, 50% to be safe, you can do that. So I think that we were actually Dexter Township on this property. Yep. So that's pretty darn close to what we estimated. Go back to that slide. 6807. And then this is giving us 6580. So not far off. One thing to note, this is based on 2020 tax rates currently. And again, this video is being recorded in 2021. So it's usually about a year behind on the millage rate. It even says here that it'll be updated to 2021 tax rate in August of 2022. So it can be up to a year and a half behind, it looks like. So pretty close on the number though. And then I'll include that in the show notes as well. But I'll include my contact information also in the show notes. Feel free to ask any questions on the actual video post, or feel free to call or email me. I'm very happy to help answer any questions that you have. So thank you for watching. If you'd like to subscribe, I'm going to put some similar videos up here. They're going to be some of them will be specific to purchasing a home in Michigan. Many will just be about purchasing a home in general, but just some general information to help you as you are thinking about purchasing a home. So thanks again, and hope this was helpful.